is we just get that damn audio working right.
Yep. Then we can do it. All right. Well, I'm gonna go live here.
All right.
Say a quick prayer.
Lord Jesus, Lord
All
Jesus.
right. Hello, everybody. Welcome back to another episode of Bitcoin and Altcoin Trading Talk. I am your host, Joe, with Coinigy here, and with the lovely Mr. Brian Beamish. So,
Oh, lovely. I haven't had anybody use that term to describe me in the dog's age, but okay, lovely sounds good.
how we doing?
The number one question, and I don't know whether we need Adam. Where the hell's Adam?
Yeah,
But how's our audio? Oh goodness, we literally got together and did that. How many recordings?
a
Looks like
handful.
the audio's good.
All right.
Um, I do understand though that yeah, and I can even see it. The YouTube live stream here is very, very choppy. In fact, actually, can you even see it? Does it look like it's streaming for you, or is it going kind of choppy for you?
It's does look choppy there, but that's OBS just
As
doesn't
long
like.
as the audio is good, we're making progress. Arr.
Yes, sir. So yeah, well, we're
Yeah,
doing
but
what we
it definitely
can.
looks like I don't know what it is. Maybe it might be, to be perfectly honest with you, Oregon's a little bit of a challenge of a society right now, isn't
I guess some would say that,
it?
but
So I wonder if the internet is a function of how smoothly society's operating.
I honestly just really think it comes down to OBS. It just doesn't like Macs. We rebooted before, and but
Yeah, well, but anyway, here we are. So I don't know whether anybody's going to be able to watch this show live. Have you? I would be curious to see. Have you actually gone back and looked at if there anybody is watching this after the fact when you
yeah,
post these
we
things
get
late?
we get comments like someone just commented the other day too. Just went back and rewatched it all. Great information.
Oh, that's good.
Yeah.
So as long as we have the audio working, then I suppose we can watch it back after the fact. But I can see once again, and that's interesting because I even did a live broadcast through the FOMC event here today,
Yeah.
and it's totally smooth. So, I mean, I hate to say it, but maybe we can ask one of your Coinigy guys to get you a half decent computer, because
I
if
know.
I'm not mistaken, I guess Apple and OBS just don't get along at all.
Apparently. Here, yeah,
Anyway, a little
just get
bit.
the encoding overloaded, but consider turning down video or use faster encoding preset. But
Yeah, because we even tested this on the weekend. We didn't run into any of this.
yeah, it's funny. It's once you go actually live is once we have the
Mhm.
issues. But hopefully at least it's resolved there. But might as well just jump into it. What do you say?
Yeah, I think what I'm gonna do is I'm just gonna minimize the live stream, and if you want to keep an eye on it, I did see a comment recently, and I think maybe you should just minimize the live stream as well. Maybe you and I should just sort of talk to each other and work together, and just have a conversation here because we sadly this show's kind of gotten completely sidetracked with all this technology problem. And I think even somebody last week even kind of said,
Had mentioned it.
yeah.
So yeah,
So
it
anyway,
is. I am paying attention here. It's trying to get some of this audio and video stuff going, but I said let's just focus on what we're trying to do here, which is teaching the wonderful world of crypto, which somewhere that people can jump in and learn is you were telling me that the Rational Investor is doing their enrollment starting in September. Love to hear a little more about that.
yeah, we do education programs 3 times a year, kind of think like universities. So we have like a fall semester, a winter semester, and a summer semester. Summer semester is winding up, and actually, this is one of our older promotion pages. We do have a whole bunch of new pages that we're putting up. Like this thing, it still has the spring term states. But the only reason why I mention it is we could probably still use this page and especially this sign up form because we have a raffle that we do every term. And anybody who actually has the tenacity to hang in and watch these videos, hopefully we have the audio issue at least licked, so when somebody listens to this after the fact, it sounds audible.
Uh,
But
we do have Adam here,
um,
so we got our trustworthy guy here. We'll have to ask him if it sounds good.
yeah. Oh, and so you are. Nah. Okay. So anyway, the point being, I think we can include this link in today's video. I think I did. I send you that link, Joe. I thought I did.
Not this
But
one.
either that, this is like the sign up, and also too, this is a pretty good sort of repository for comments from previous students about where the value that they got out of the program and whether they think it's a good use of their time and energy. Um, so the only reason why I mention it is because we do have a new school term starting up here in September, and it is the end of July, so we're still well ahead of that. But I would love that if you did put the time and effort in to watch these shows, that you be part of our raffle. And we basically give a seat away every term. And I just wanted to bring it to this audience attention. And also, as I said there a moment ago, this is a good page just to get to know TRI a little bit better and what the school program is all about. So it's a good sort of opportunity for you to learn a little bit about TRI. In the weeks ahead, I think we're having a completely sort of revamped page. So it'll be a slightly different address, but the raffle is the raffle is the raffle. And if you join the raffle and you win, then you get yourself a seat in the school. And I would like everybody to try and benefit as much as possible. Everything that I'm trying to teach here to Joe through these videos, we teach in the school program. And it's a very, very thorough program. That's the one thing I really do like about this education program is most people on social media um, will highlight their strategy. Um, And then, if a guy's a half decent trader, obviously that's a pretty good sales pitch. They'll show themselves trading. Very rarely have I seen on social media anybody actually teach this thing. In the professional trading community, we actually called it the process. And that's all about doing things like working with a trading plan, uh, trading setups, understanding risk management and the different types of risk takers there are in the marketplace, and then trying to figure out what type of risk taker you are. And so, where do you fall in that spectrum? And then, of course, through your trading plan, that's expressed through your plan. And I've always told people that, it's great to see guys who are like, hey, look at me, I just banged out a $10,000 win. I mean, that's awesome. Way to go. But I actually don't really judge a trader's quality based on, just a prefabricated video showing a nice winning trade. If anything, I actually prefer to see what a losing trade looks like and how you handled yourself through a losing trade idea, because you're never going to be right 100% of the time. And ironically enough, usually the way people destroy themselves in the world of trading is they just can't admit that they're wrong. They have a losing trade idea. They don't manage their behavior and manage the risk on the trade appropriately. And one trade can literally blow yourself up. And it can also do a lot of psychological damage to you. That in the future, you just say, oh, it's all a scam. It's all, rigged. And, it's all just a big conspiracy to steal your money, which it really isn't It's really, if you want to be a professional trader, it's a conspiracy of how can you regulate your own behavior. And a lot of humans can't regulate themselves. They
Hmm.
can't manage their behavior. So, as I said, the big selling feature of our education program is what we're really trying to teach you how to do is effectively run a small business of trading. And I believe, I mean, I've been doing this game for 35 years. Squiggly lines are fun. And, I love getting together with Joe and talking squiggly lines. You can see we were talking a little bit about dog money before we got the video going here. I think that there's a whole bunch of keys of understanding how to appropriately interpret squiggly lines. And I also think that there is a process when it comes to actually like the cadence, if you will, of how to identify a half decent trade idea. And those are the kind of things that I think I provide value to people. As you guys watch these videos, of course, you know that I have very distinct ways that I like to measure the market and tools that I use. But this is Brian's own bent. I mean, I don't know whether you've ever been on like the Coinigy site and gone through. I mean, there's just a couple indicators that you can use, right? I mean, there's a million different
Yeah,
ways
I
to
got
skin
over a
this
hundred
cat.
indicators there that people
There
can
you go.
use.
So not a million, 100 different ways to skin this cat. And then, of course, there's all the different combinations. Some indicators measure price, some indicators measure volume, some indicators measure volatility in the marketplace. Um, so, the various different machinations of how you're going to incorporate all these different indicators, I think that that's a big part of our education program, helps people understand sort of the appropriate sort of combination of indicators and tools to, like I said, try and help you identify. And really what we're trying to do is just simply stack the odds in your favor as much as possible. Remember, this is an odds game. It's not like you're going to be, use this one indicator and you're always going to make money. It never works that way. Um, and half of our battle here is just to try and figure out what actually works for you as an individual. And it might be using my indicators, the combination of indicators that I like to use. You might look at some of my indicators that I like to use. Remember, like this indicator down here. This is, you're never going to find anybody else anywhere in the market that uses an indicator called the Willie, unless, of
Hmm.
course, they're a student of mine and they've been taught by me. This is a very, very specialized indicator. So
And I
the
will,
point
I want
being that there's no one right way to trade, but there is a right way to learn how to set yourself up to run this thing, a small business of trading. And that's what our education program is all about. So
I
I
do want
actually think it's
to
been
throw
fairly well
something in
received.
there. When you mentioned only like your students would kind of be using the Willie, you guys have such a tight knit community over there at the Rational Investor. I think it's really admirable. I mean, we post stuff on here. We get a lot of your students in. You guys, uh, the proof is in the pudding. There, I must say, of just like your students wouldn't be vouching for you if they didn't feel that way. And just it seems like from an outsider's perspective and like getting to interact with some of these students, I think it speaks volumes to the way you guys run that program and uh, just kind of carry yourselves throughout it all. So hats off to you guys, because that's something I really have noticed about since working with you is interacting with some of these the rational investor students and just hearing what they've had to say and commenting on the videos after the fact. So I don't know, just wanted to throw in that 2 cents there. That was
That's
a
cool. Um, in a weird sort of way, and it's, you don't want to get into sort of the whole sort of mysticism of all this, but I believe that I was asked to help. And when I did the videos and the shows with Alex and Will in the past, and we tried to get this back up and running here with Joe. it's really out of a genuine desire to make a positive difference in this world. And I think that we attract those kind of positive karma type people. Unfortunately, with the internet, and especially with certain characters in crypto, have you ever seen my Twitter front page? I think
Yeah.
I've talked to you guys about this before.
Yes, we have.
But my Twitter page, I specifically have an image of this guy on my page because unfortunately, and it's not just a function of crypto. Everybody knows the SBF and tragedy of FTX, right? But I might actually argue that SBF actually, I personally think he's actually a bit of a puppet. And you could argue that this guy is actually, um, I was kind of hoping that it would pop up. But anyway, I put out a tweet recently that you got to be very careful about the people that are in the background. Everybody knows this guy. I think his name is Dan or something like that. Anyway, he was a real cheeky character behind FTX. But anyway, that's too bad I can't find that laptop, man. Anyway, so the point is that when we started up TRI, there were a lot of these kind of shady type characters that came around TRI, and I just simply told them, you know what, you don't need to be here. Go away if you're not going to be a positive influence to the community. And we have a very active community, lots of different trading rooms and stuff like that. But have you ever heard me use the expression PMA for the win?
Yes, sir.
Uh, I put it on almost all my tweets and stuff like that because really we got to try and it's I use the expression 1 + 1 = 3. So if we all work together and we're not trying to screw each other over, some really cool stuff can happen in this universe. The only problem is a lot of people in this world, like the guy who was behind SBF, and I mean, I don't know, maybe SBF was a criminal and it was all intentional from the beginning, but I could actually get the impression that he was kind of used by some very, very nefarious people. So we
Mm-hmm.
just try and keep those people out of TRI, to be honest with you. And as soon as I see people kind of posting that kind of stuff in the lounge and in our Discord and stuff like that, we actually just say, "Look, here's your money. We don't need you here. Go away."
Yeah. Be gone.
So, and actually, just for whatever it's worth, the last comment I'll make about the school, and I've said this from day one. It might even actually even be written in here in the fine print, but I've told everybody from day one that if you take the school program, and you can see how much we charge for our education program, and it's ridiculous, especially in this hyperinflation world. I mean, $1,000 is nothing anymore. But anyway, I've made this promise to every single one of these students, exact same message. If you come to the classes, if you do the homework, if you do the assignments, if you do everything that we asked, build a trading log, build a trading plan, take your personality test, build your journal, do a verbal diarrhea that we ask you to do at the beginning of the program to get all your baggage out. If you build demon finders, if you well, it's a little bit more advanced concept, but just the point is if you do everything that we ask you to do in the level 1 course and you write the exam, you actually make the effort to do what we ask, and you still feel as though you did not get your value, your money's worth from the education program, we will more than happily refund your money. And I've yet to have a single person that they went through the process. They said that they did not get value for their money and they asked for their money back. I mean, I've had a few people kind of half-ass, and I say, well, show me your exams, show me your trading plan, show me your log, show me that you did 100 paper trades, and then all of a sudden they mysteriously disappear and you don't hear them bitching and complaining anymore. So the point being that if you actually do the work and you show us that you did the work and you do not feel like you got your money's worth, we will give you a 100% refund. Guaranteed. I've said that since day one that I've started this program. So anyway, sorry for the rant there. Went off on a tangent. All right, so there's your sales pitch.
Well,
Sign up for the school.
that's awesome.
And if anything, we should probably also too circle around. We used to actually do a deal for the level 1 students. Would get a substantial discount to the Coinigy platform. I don't know whether have we had you working away on that recently, Joe?
Yes, we do have a promo code.
Yeah.
I won't say that over the
Obviously.
show now, but we do have
So,
a nice
if you do
promo
take
code.
the education program and you are interested in Coinigy, they do offer a very nice special for TRI students. So, FYI.
Yes. But yeah, we have a individual promo code that's made for TRI users.
Yeah. All right. So enough of the shill. I guess and by all means, if you want to take a moment and shill something about Coinigy, go right ahead. I'll be quiet now if you'd like.
I think we can jump in right on in here. It's funny you mentioned SBF, and I saw something on Twitter today about some judge asked that he be arrested for tampering with evidence.
Wow, really?
So,
FTX is suing its founder, Sam Bankman-Fried, for $1 billion. Holy moly.
yeah.
What a soap opera, eh?
Yeah.
I suppose where's the Luna guy in all these conversations?
Yeah.
Very crypto, you forgot Luna. Anyway, and also the Celsius guy, he's in a lot of hot water too, isn't he?
Yep.
So oh boy.
Interesting
Interesting how SBF pulls up pictures of these guys. Oh, goodness. All right, so yeah, he's still in it, and if I kind of saw headlines to the effect that he's still chattering away and doing stuff that his lawyers are even saying, "What are you doing? Stop!"
Yeah, at least he's off Twitter now. Some of those his like Twitter rants like right after the fact, I was like, "Come on, man."
Do we even call this Twitter anymore?
Oh,
'Cause I don't
sorry,
think
X.
that's what it is,
It's
right?
X.
Yeah. So Alan is taking over. I mean, clearly because he owns the fucking place.
Yeah. Well, then so
And
Facebook.
I don't even know. I mean, it's kind of sucks because I've got I don't know, about 15,000 people that follow me.
Yeah.
I mean, I have a feeling my days are numbered here working on this platform, which is kind of a shame.
And well, then Facebook or Meta launched Threads, and I saw something that it was like down 70% of user engagement after the first week.
Yeah, well, I think what happened, if I understand correctly, is anybody who had an Instagram account,
yeah,
they kind of just, oh, here, do the Threads, right? So, like, instantly they had like 10 million signups or something.
Yeah, what more than that?
But it turns out that if you wanted to kill the Threads, then it would kill your whole Instagram account and all that.
Yep. So a lot of people just like still have the account open but aren't using it.
Yeah, yeah. And if anything, Joe, and actually it's probably through the window that you graduated university and got sort of onboarded on the Coinigy and stuff like that. We actually had the privilege over the past 20, 30 years to live within a very unique time. Like when the internet first started, I remember the brokers in my particular office. I was working for a commodities brokerage firm, Richardson Green Shields. They were out of Winnipeg. You ever heard of Winnipeg? Well, Winnipeg would be just north of where Coinigy is in Minnesota.
Wisconsin, we're Milwaukee. So
yeah,
north of Chicago.
Manitoba just north of Wisconsin? I can't remember. Oh, I said Minnesota.
Yeah.
Anyway, the point being that back then, when the internet first started, man, the look on the brokers' faces. I remember this one guy, and I showed him like different websites that had like charts on them.
Hmm.
Like this one place, it was called quote.com, and it just started up, and he was like giddy like a schoolgirl. He couldn't believe it. You can actually get these charts online right at your fingertips. Because I don't know whether you've ever heard me say this, but I used to get my price charts, like this price chart. I used to get this stuff in the mail, and it would come like literally, there would be like two issues issued a month, and the charts would just literally be like tissue paper, and if you made any mistake writing on it, you would totally tear the paper. So, wow, we've come a long, long way.
Yeah.
But, I guess with regard to things like social media and stuff, we're almost lived through an interesting little window there where kind of a lot of stuff was free and a lot of communication was free. And you can just feel the walls are closing in on us here, which is a little bit disappointing.
Things are free. I don't know, jacking up prices on things for subscriptions. I saw Spotify's getting like increasing their price. You got,
Are there?
yep, and then Netflix kicking everyone else off. I just finally fell victim to that one the other night. Uh, got
Well,
booted.
wait a minute. I mean, I don't condone that, and we
No,
never publicly want to be online
no,
on the record
no,
condoning criminal behavior.
no.
So I think everybody that uses Netflix should pay for the service because
Yeah.
it's not like some public broadcasting or something that they're doing. Um, which is an interesting commentary about this platform that I have on the screen right now. I mean, I wouldn't be surprised if actually mandatory if you want to use this in the future, you must pay Alan a monthly fee, which is kind of a shame. That's the way it's going. Anyway, let's talk a little bit about how our viewers can make a pile of money using the Coinigy platforms. And I don't know, is it interesting that maybe we talk a little bit about dog money here? I suppose is an interesting dovetail. I don't
Yeah, might as well jump in to it
know. All
there.
right.
Basically, so this conversation got started earlier by some crypto influencer posting just a very basic technical analysis of a single trend line. It was like about to jump, and there's like nothing else in it. And as Brian said, there's different ways to trade and look at it, but uh, I mentioned it because it
Yeah.
just felt like a very dumbed down version.
Well, and that's, this is a little bit of a danger of what's happening in the market, I think, right now is I think I mean, and you can see it in the kids' faces, right? There are a lot of kids on social media and stuff that wouldn't have the ability to grow a handsome beard like Joe has right, because they're just too young and they're brand new to the space. If they spend maybe 10, 20 years working on the craft, they'll actually learn like what's a correct trend line to draw and what's incorrect. And I see this a lot with people is that they just sort of arbitrarily draw lines on their charts and declare them the prevailing trend lines. And of course, in crypto, it's always a little bit of a challenge. We were looking for a lot of data to use to actually look at Doge, and then you have to figure out, okay, do you want to do like charted versus tether, or do you want to chart it versus dollar? And then is that enough data to use? Well, maybe we need to go to a different website. So there's always a challenge around what is sort of the most robust data set to use when you're doing technical analysis. I'm not going to sugarcoat it. In crypto, this is a bit of a challenge. I do like using sites that have been around a generation or two. Like Polo was probably one of the first sites that I actually ever used trading crypto. And it's interesting that even here, because Tether hasn't been around forever. So if you look at something like Doge versus BTC over on Polo, actually you get a heck of a lot of data. Let's see how far back this thing goes. Um,
It looks like you're on it already on Poloniex there.
Yeah. So that shows USDT. I was kind of hoping
Oh,
we could. hop
You're
on
right.
over to
Does
Bitcoin. There, maybe we'll come back. So even on Kraken here, right? We can see we got data going back all the way to 2016. Actually, this is an interesting chart unto itself. So you can kind of see that relative to Bitcoin, we're actually, I hate to say it, but this actually structurally broke down there briefly. And I like to follow weekly charts for this sort of bigger picture. And actually, this is trending down here versus Bitcoin. That's kind of an interesting commentary. I bet you don't hear Alan talk about that too much. And actually, this is a good lesson on drawing appropriate trend lines. You actually, how do you validate? So if you're watching this video and you're kind of like, well, I wouldn't mind learning something, Brian, while I'm listening to
mm-hmm.
you. How do you actually validate trend lines? You actually validate a trend line, in my humble opinion, by this concept called market structure. So why is this a valid trend line? Well, it's because this is actually what's going on. Rally, sell off, counter trend rally that does not make a new high. And then the most important event here is the trade through the sell off low right there. That's actually the most important event here. And that actually validates this as a legit active trend line. A lot of people in TA don't get that. So it is interesting a moment ago that I had mentioned that this low was traded through. Because what this does mean is we can actually go to like a monthly chart. And now you could actually make the argument that this is now a valid monthly trend line with that validation of the market moving through that low there. This is completely valid as far as I'm concerned. So that's not a good sign. And this versus Bitcoin. So, this might just be a function of Bitcoin's going to outperform dog money going forward. Um, I if I'm going to invest my hard-earned money in this space, I think it behooves you to actually study this stuff versus something that's it might maybe Tether isn't the best thing to use. Maybe you just want to use euros or you want to use US dollars if they can give you that quote. I think this gives you probably like I'm here to make money on Doge. I want to buy low and sell high. I'm going to be buying in US dollars, selling in US dollars. I would actually recommend that you actually use US dollar, not Bitcoin, to gauge your entries and exits. In the 17-18 bull market, a lot of people used prices versus Bitcoin. Then the 18-19-20 bear slide, if you studied and owned assets versus Bitcoin, a lot of your assets kind of just went sideways because the altcoin and Bitcoin both came down together. And it was like a double whammy of getting hit. So that's why I think if you're here to speculate and you're here to make money from trading, I think it's a good idea to do your TA versus hard currency. So anyway, with that said,
it's good to know.
um, I might look at a chart so like this. So this is Kraken, and actually, interestingly enough, had to basically walk away from Binance. North Americans can't really use that platform anymore. So this is, I think, basically this and Coinbase, I think, are probably the North American proxies. And of course, just be fully aware, IRS, Big Brother, Revenue Canada, Revenue Christine Lagarde, whatever the hell her taxation bureau is called. Over there, they are watching our step very closely. And if you do make a capital gain, make damn sure to make sure that the mafioso is paid their cut. Because that's just the world that we live in. We're all slaves to the mafia. So anyway, with that said, don't screw with the mafia, because if you don't pay your taxes, you can get yourself in big trouble, and
Mm-hmm.
it's just not worth it, right? So just be a good law-abiding citizen, I suppose mafia references isn't exactly politically correct, but anyway. All right, so the point of the matter here is now we're looking at Doge versus USD here over on Kraken. Not a bad chart to use. Um, Interesting how Doge broke down versus Bitcoin, but not breaking down versus USD. So that's an interesting comment. Does that mean that maybe Bitcoin's going to outperform Doge going forward? Well, I could see that. That wouldn't surprise me. If I was going to draw trend lines on a chart like this, like I said, it's not a bad idea to start with your highest time frame. Obviously, we have that peak there, but market structure wise, the next peak is there. So that's actually the trend line off of the top. And that's not very usable. I mean, you can see we broke that downtrend very quickly. So what do you do with the next line? Well, I mean, you're just basically going to be playing connect the dots with market structure. So there to there to there, that was confirmed here. This is now a valid trend line. Boom, boom. And you can see how the market respected that trend line the whole way along here. Here's a really good lesson. I've tried to teach you this, guys, before.
I have a quick
That
question for you there. I'm sorry, I don't mean to cut you off.
yeah,
But why are you starting at the wick on one and then going through the candlestick, or is that clicking on the wick of the second point?
this is the top of the wick right there. Top of the wick right there. Top of the wick right
Oh,
there.
you're clicking on a different one.
And
Point
I
I didn't
suppose to
see.
make this even better, we should hit the little magnet button here.
That makes
And
more sense.
I mean, I'm a price purist, and that's because I come from like the commodities field. So every single trade in my eyes means something. Somebody either accidentally fat fingered, but somebody bought up top here. So that to me, like that's what I mean by price purist. This information is important to a guy like me. There are a lot of people, especially a lot of institutional players, that they actually get rid of the wicks completely and the tails. And considering half of social media mispronounces tails and calls them wicks,
Inverted
maybe that's
wicks.
a good idea. I don't know. So there are some people in the marketplace that will just hide all the moving averages and all that kind of fun stuff. They might even just operate off of this kind of chart. And there's nothing wrong with this approach too. You could say that this is a valid trend using the clothesline levels that was validated here. And then the next one would be off of that high. See that there?
Mm-hmm.
And that's validated with the move down through here. So, as I said, I'm a price purist. So, for the purposes of these lectures and talking to you guys, I will be using the wicks and tails, but just understand, both methodologies are perfectly fine. And really, what we're looking for here is we're looking for the trend line to be broken and then the market to actually tell us that we've actually let that trend line go and we're heading in a new direction. And again, how do you validate that? Market structure. So, like I said, this is a really good example. Boom, boom, boom. And we'll get rid of the clothesline ones just for the purposes of this conversation. This break here, I mean, yes, it's a break of the trend line, but it doesn't mean that the market actually is trending up like on this big, and actually that's called a doji right there. And it's interesting because this doji is basically an indecision bar. So the market broke the trend line and then instantly said, I don't know whether I really want to be up here or not. I'm not quite sure. And then sure enough, notice how the market melted back down. And a lot of new people to trading, they get sucked into this trap right here. And keep in mind, I've been at this for 30 bloody years, even longer than that, actually. But I, for the longest time, would get sucked into this. All right, there's a new bull market, away we go. And then it's like, oh, crap on a stick. And look how the damn market just walks its way all the way along this. So what do I mean
So
by, the market actually validating that it's finished with this trend line? Well, what we really want to see is we want to see a W, because what is a W?
on
All
the
a
other
W
side.
is the establishment of a new trend. And how does the new trend get validated? Through the W confirming the move through the middle. And now you actually have a new uptrend working. Does that make sense?
It does. And
Yeah.
could you quickly run me through the doji of what uh, that means?
All
And
right. So think of it just really simply put, every single candle you see here on this screen is a visual battle going on in the marketplace at any given point in time. And a candle like this one here, actually, well, actually, this one's probably really good. So you notice this green candle here. Notice how it opened up, right? And the way the candles work, maybe we should start with that, is how does a candle actually work? If we change this to a bar chart, you'll understand this a little bit easier. Bar charts?
up above candle, it's the first
Oh yeah,
option
there we
way at the top.
are. All right, there you go. So you can see the way that, and this is ironic enough, the way that I learned technical analysis a million years ago is I used to use bar charts. And this is classic North American chart. Candlestick charting was actually developed in Asia, Japanese. I have to call it Japanese candlesticks. So anyway, you can see the little hash on the left-hand side of the bar. That's where the bar opened. And then the little hash on the right-hand side of the bar, that's where the bar closed. And, you know, in classic terms, if the bar closed higher than it opened, it would be painted green. If the bar closed below where it opened, it would be painted red. Japanese candlesticks works very similar to that, where the open is just going to be sort of printed on the left-hand side of the candle. And if the candle paints green, like you see this candle, it means that the open was down here and the close of the candle was up here. The bulls carried the day. Conversely, this candle right here, it opened up here, it closed down here. The bears carried the day, or is a down day. Down. So green up bar, red down bar. Now, that's a very clear visualization, right? This green bar here, this is what's called the body of the candlestick. If it's green, then it means that the bulls won the battle. And every single candle is a battle. Next candle opened up, you can see it went as high as here, but it went as low as here, finished here. It ended lower than where it opened. The bears won this battle. And for Japanese candlesticks, the most important data for Japanese candlesticks, and also too, I suppose, if you think about it from a closed line basis, if I just draw a simple, you know, what is the trend? Remember we did this before. If I just use a clothesline, all it is this is the close of the candle. And that's the bar, whatever you want to call it, the reporting period. You don't even see that war that went on through that candle. All you see is the closing price of that candle. So what the colors of the candle describe is what happened through that period. And each period, I think, is an important reporting period. Um, and, you know, very, very bullish candles will look like something like we opened up top. Let's see if I can make this so it looks centered. Oh, silly thing. Yeah, there we go. There we go. So we opened up top here. We actually, through the period, we sold off, creating this big tail. And then the market came screaming back and actually closed higher than where it opened up, i.e., a green candle. Remember, we said green candles. Very, very bullish bar. This was called a hammer. You could make the argument the exact opposite, that if you have a body where the market opened up, it tried to rally and then got slapped in the face, and price came screaming back down, and this candle actually finished red, that's a very bearish candle. Now, what happens if you have a very equal distribution?
Okay.
Maybe it's so equal that actually the market finishes exactly where it started. So the market opens up, it explored higher, but this is demand. So demand was strong, but then supply came out and drove price back down. But then conversely, there was so much supply, they drove the price down below where it opened up. But then demand came back in and it bid the market back up. And if it happens to finish at just about exactly where it opened up, then what this really means is this is a war zone. And quite literally, the front was pushed one direction, then the front was pushed another direction, and then we ended up finishing almost exactly where we started. If there was a war in our recent history, hint, 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 1950 to 52, what would that war be? You have any idea what war was fought on the
World War
global
Two?
scale? Huh?
World War Two?
Oh
Or
boy.
wait, what
Hey, you're
what
an
years?
American, right? So Americans aren't known for their education
No.
system.
Wait, so what year?
Sorry. That was a terrible dig.
Korean War?
Korean War. Very
Yeah.
good.
These
And I'm sorry, Joe. It's terrible.
no offense taken. I got it wrong.
So, what happened in the Korean War, which was fascinating, right? Anybody who's a historian of the Korean War, is it literally when the Americans were kicking butt, then the Chinese came into the war and they almost pushed them right out of the country, down off the southern border. Then the Americans came back and did the Incheon landing and got things sort of stabilized, and they actually finished the war almost exactly where they started the war. The border between North and South Korea is almost exactly the same as what it was before the war.
Mm-hmm.
And what's happened in North Korea since then? It's just been basically a stalemate, right?
Yep.
Nothing has really changed. So, interestingly enough, it's kind of an odd historic analogy, and my apologies if I insulted anybody. Brian's always terrible with that kind of stuff.
None
But the
taken.
point here is that you could actually call this like a Korean War candle, where basically a complete indecision. So after all of my explanation, does it make sense why this is like we don't know what the heck's going on here
Yeah.
if we paint a candle that looks like this?
Yes, it does. And that analogy actually very much so did help.
Okay, cool. So you can see that this candle right here looks almost exactly like that, right?
Yeah.
You see that? And then they even did another one here. Right? So, and quite often what ends up happening is you get periods where multiple dojis are put in. You can see there was one that kind of happened down here, and then the next candle was same sort of thing. But in this case, the bulls actually carried the day and the price was pushed back up. So we always say never take a trade off of just one reason, right? Candlesticks, I think, are just one reason. You kind of want to put stuff into context. So if you drew this market structure trend line, and then also too, keep in mind, there's also this really tight little M right here, right? Up, down, up,
down.
fail. So does it make sense that we can draw a trend line off of those two peaks as well? Because that's a validated market structure signal.
Yes.
Does that make sense?
It does.
All right. So not only is this trend line working here, and I actually think that this trend line was validated over here. I think the reason why we dojied out here and failed here was because of this market structure, and that is validated, right? So we could kind of what Joe was saying earlier. What points are you using? I would use the high of that candle, and I would draw it off of whatever the subsequent high is. I don't know if you want to go off of that high there. That's fine, right? And then we did the extension of the lines. So do that. So extend right. There we go. So point here is these two trend lines are actually very, very active. Doji's coming in, and then of course we have to walk our way back down. And I often like to actually overlay like multiple trend lines. And when we get to the present about what's going on here on Doge, you'll actually understand more of what's going on if you draw like these multiple trend lines. And what I like to do is I actually like to draw like a triangle. And I kind of like to say that, you know, this is actually your trading range. So notice how the market just sort of worked its way along here. And look how even through here, you know, let's see if you can remember. What do we call a candle where the body was kind of near the low and you have this huge wick up top here? Can you see that? Remember what we call that?
So when it's at the
Inverted
top, you
hammer.
said it was a hammer,
Yeah, if
but
it was the exact opposite, it'd
you
be a
did not
hammer.
say the name of it. I was
Oh,
about to ask you what it
oh,
was,
okay.
but
It's
you
called a
said
shooting star.
shooting star. Okay.
And here's a really good example of a shooting star. You see that right there?
Yes.
So that's like you could write down inverted hammer. You know, I know a lot of kids on social media drives you crazy, but they'll like call this a wick. And it's not a wick, that's a tail. So anyway. And then on the site we go, okay, well, you know what? That's an inverted wick. Making fun of the social media kids. So
Yes.
if you want an easy way to remember this, is kind of tongue in cheek. That's an inverted hammer. But the actual real name of it is a shooting star. So, can you see the difference between this shooting star here, which actually turns out to be rather bearish, and there's another shooting star here? And of course, look at what happened afterward. That makes sense. But look at what happened here. Do you see? Remember what we call this? This is an inverted, whoops, this is an inverted shooting star, which we called a hammer. Oh,
Hmm.
come on, you. Oh, jeez. Oh, give me a second. Okay, there we go. Right there. See that?
Yep. So that's a hammer.
So the fact that we went up through this high actually suggested that we were going to have this rally. And actually, interestingly enough, off of hammers and shooting stars, because actually, if you look at the Bitcoin chart, it has one of these working right now. Uh, the distance from the top of the candle to the bottom, if this hammer actually validates, the price objective should be basically a replication of that range to the upside.
Huh.
So do you see how that's basically where this rally stopped? I don't know how to turn that off. Can we turn off, please? No, you're not going to turn off. All right. Anyway, I would draw a horizontal line right off of there. So that was just there to there and there to there. Up into there, and that was your price objective. I can't get the magnet thing to turn off. So unfortunately, when you do with the magnet on, it kind of skews things. But anyway, there we go. We can do that. So notice how that distance, the size of the hammer candle there, on the move through that high, you just replicate that, and that's your target there. So actually, that target was validated there. And then interestingly enough, halfway through, and hopefully now when after I sort of describe all this, you go, hey, look at Brian, there's a doji right there.
Mm-hmm.
Yeah, you're right. Hey, there's a doji right there. Hey, there's a little bit of a hammer there.
The
And
doji
notice
on the
this next
Doge
candle
chart.
never went through the top of the hammer. There's look at this cute little doji right here. So a bit of a bigger body, but nonetheless, wick up top, wick down below, resolution through the top of this kind of semi doji almost. Actually, it's a bit of a hammer as well. Is actually a bullish indication. Woo, up she goes. Okay, so let's get back to trying to give you a half decent information here you can use. I don't know whether I'm doing a good job tonight. I might be just doing a terrible
No,
job.
you're doing. I've got giving me notes. I've been taking notes here. So
Okay, that's good. All right, so this is gonna get a little bit tricky drawing all of these trend lines. I like that trend line there, so that high there. Oh, now the magnet's off. Come on, magnet. Yeah. All right. So I like using the magnet to really find the points. You notice that the lines get nice and crisp. So I would use that. I might do the next one actually pretty steep here, something along those lines. Then another one along here. Like that. So there to there to there, break down there. And actually, I think this is the predominant trend line now. So 1, 2, 3, revisit. Is that a buy right there? No. What
mm-mm.
we really want to see is we want to see a W
W on
on
the
the
other
other
side.
side of this. Because remember, I'd said earlier that this, because of the market structure signal there, let's get rid of this. Can I do that? 1 second. So, because of this market structure signal, especially look at how that
Yeah.
yeah, that shooting star there totally went right up to the trend line and then just was wickedly rejected off of that.
Are
Huge signal there.
are shooting stars, can they be considered generally bearish and like hammers more bullish or
Exactly. I mean,
okay?
look at this. This is
Yeah.
the ultimate expression of a shooting star. You see that right there? That is the most
Yeah.
crisp, well-defined shooting star you'll ever see. A really, really good example of one right there. So market comes shooting up to this. And like I said, I think this is a, you could even draw because this market structure came in down here. I think you can draw an uptrend line, place to connect the lows is validated on this market structure signal there. So this is a valid uptrend line, valid downtrend line. And really the market will actually be issuing a buy signal if it can somehow put in a W on the other side of this prevailing trend line. So you can see how it went up, right? It went up, down, up. New M, son of a. It went up,
Down
another new M. It just made another lower high. Then we broke that, we went up.
and
So
then
interesting enough, at this point, we've got lower lows and lower highs. This actually creates what's called a megaphone.
okay, that's a new term.
Yeah, I don't know if you've ever heard of that before. Anyway, it looks
Yeah.
like there to there and there to there. See that?
Yeah.
And I don't know whether the charting library will
I
have
think
it.
it does. Almost positive. I've seen it before unless they maybe try emote. Actually, no, you can scroll down. Objects, there it
There it
is.
is. Yeah, right
Beautiful.
there. So on my charts, I would put something like that. And I would say, dun, da, da, da. See the megaphone?
Yes, I do.
Interesting thing about the megaphone is that each side should be tagged 3 times. And a third tag of the megaphone is actually a trade setup. So you notice 1, 2, 3. Oh, hello. 1, 2. I think the odds are we probably want to trade up into here and hit the top of the megaphone. I'd say probably pretty good.
Okay.
Right up into there. So remember we had said this prevailing downtrend line, maybe this is what your social media guy saw, I don't know. But you can see how they tried to break it, and it was a pretty big move, eh? That was last fall. And there was just no inertia following the break. This took a lot of energy. And my hunch is you've heard me talk about this before. What do we call these guys right in this shooting star candle? And these guys.
The institutions
No.
or the guys that they're trapped
Trapped, good. And this was an up candle, so they must be trapped.
in
Bulls,
trapped bulls and then the
right? Because
bears.
this thing was turned up and it was moving higher. And everybody's like, oh, this is a new bull market. Gotta buy, gotta buy, gotta buy. And all of a sudden, the damn thing melts down. And where are they sleeping?
On the couch.
If they're lucky, if they're not so lucky, they don't even get to sleep
Sleeping in the
indoors. They're
doghouse.
around the goddamn doghouse. So my hunch is this rally here actually let these people get off the couch. And that's probably half the reason why this market melted down following that big spike. Because there were just so many people
Just
that were
open
just like,
orders.
oh my God, thank God, get me the hell out of
Yeah.
here. I'm so out of here. I'll never buy this damn thing again. Does that make sense?
It does.
It happens a lot in capitalism. Don't think that this is special for dog money and Allen. It's
Yeah.
very normal in the market.
You see those.
So this
Cool.
is not a bicycle. What we need is a W on the other side of this. Maybe what we'll do is we'll change the size of this so you can appreciate it a bit more. And something like that. So we really need to see a W on the other side of this trend line. Now the interesting thing here is we said that this really hasn't carved out a W yet, has it?
No.
Made lower lows and we've made higher highs, which is by definition what they call a megaform pattern. And unfortunately, this isn't really this unfortunately is a trade pattern that sets up trades. It's like a range trade setup. It's not a trending signal. It's a I'm stuck in a range and I really kind of don't know what I want to do. So I'm going to flounder around a little bit and I'm going to test both sides. Probably a lot of liquidity hunts, stop runs. You've heard me talk about that kind of stuff.
Yep.
You know, this move through this low right here was probably a stop run. Notice how they busted through this low. And then all of a sudden, out of nowhere, and actually, I'd be curious. Maybe this is something you can learn here today. I guess today is a candlesticks tutorial day, eh?
I love it.
So in the description of this video, maybe you can type in like, "Hey, Brian spent some extra time just talking about candlesticks today."
Will
I'm
do.
taking that off, but I don't know how to do that. Go away. Anyway, so do you have any idea what this 2-bar pattern is called? Have you ever heard me talk about 2-bar patterns before?
The railroad tracks,
That is a
2-bar.
pattern.
But
Does that now
doesn't.
railroad tracks? Think of a railroad tracks.
Yeah,
Like if you were just
the
gonna
same.
get rid of the wicks and tails and just think railroad tracks kind of look like that and like that, right? Side by side.
Yeah, that makes sense.
And they're usually equal distance. And you know, maybe for simplicity purposes, we'll color one red being a down move, and then one green an up move, and they're usually equal sign. And then if you can get a trade above this up bar, this next bar, like something like that. Yeah, we trade through that level, the next bar. That's a buy signal right in there.
Okay.
That's a railroad tracks. So big move down, big move right up. They're about equal. And then the next candle trades up through that high. And then conversely, you could have this as a big green bar and then a big red bar following. And then a move through the low would be a sell signal. Does that make sense?
Mm-hmm.
All right. So does that look like that?
No.
No. So what would we call this kind of bar? This, notice this candle here, all of its range, I don't know whether you can see that,
Mm-hmm.
is all of this range is inside this bar's range. You
Okay.
see that?
Yeah.
Anyway, that might be hard to see on this screen. Let's look at zoom in. So, yeah, and don't overthink this. Keep it as simple as possible. All of this price action is inside this bar's price action. So what do you think we call this bar right here? Don't overthink this.
Inside bar?
Huh?
An inside bar?
There you go. Way to go. Nice and simple, right?
Let's go.
This is actually a reversal signal. If the following bar, we can trade up through this inside bar's high. Where did there it is. Anyway, I wanted to change the color of this. Where the bar thing is. Anyway, we'll just go with this. So right there, a move in that high there is 63.9497. And you notice we traded up through that high, this bar. That's actually a buy signal.
Okay.
So remember I had said earlier, notice how they punched the market through this low? That was probably a stop run. So anybody who said, okay, I'm going to risk to a break of these lows, which means that maybe I bought this inside bar, I'm going to have my stop loss here. And you see, had you bought that inside bar there, it worked out pretty well. So hopefully you took a little bit of profits on that move. Then we have, this is called an empire up here, but you remember, whoops, we labeled, this bar, what did we call that bar right there where the tail and the wick are about equal and the bottom is
Doji.
pretty small? Yeah, so the doji actually failed and produced a sell signal on a move through the doji low. So that sort of offsets this inside bar bullish signal. This 3-bar pattern is called a fractal. And you remember we in the past, we must have done this because I still have this on the screen. We have our little, oops, that's not what I want, the fractal signal. So there is the fractal signal. And maybe it's just loading. Looks like it's thinking. Anyway, this right here would produce a fractal, a little top right up. So anyway, back down we go. And then you can see here is a 3-bar fractal here. Back up we go. Interesting, we had a little doji there. So we said that that's an indecision bar. We broke the doji's high right there. Up we go. Then we have a shooting star here. If we break the shooting star's low, that's a sell signal. So down we go. You see how we broke it here? And down we go. You can see we had an inside bar here, a doji bar here, but we never broke the doji's high, did we? So the bear's still in control. But notice, and this is a really cool application, you can just draw a simple trend line off of this low and then this low, and lo and behold, there we are there, right? Remember I had said earlier, this was our megaphone pattern.
Mm-hmm.
Very, very normal in markets. Very, very normal. Don't think that this is out of the ordinary whatsoever. So you can all do this. It doesn't matter what asset you're trading. You can draw these lines in. So point here is nice little inside bar. So that fires. You could also argue that the inside bar itself, what kind of bar does that kind of look like? Let's see if Joe's paying attention.
Doji.
Excellent. Perfect. So a move through the doji's high is a what type of signal?
Buy signal.
Yeah. And I mean, the great part about technical analysis is you should be able to look at this and go, yeah, I guess if I had bought the doji bar inside bar and here we are now, I guess I'm making money. So I guess it must be right. So that, take a screenshot of that. If you've never used candlesticks before, that's an excellent little tutorial there on dojis, on inside bars, on megaphone bottoms. And the interesting thing about this megaphone is that the target is actually way up here. So, from just a very, if you really wanted to be a slick, sort of look at me, I'm a trader Joe, you could just buy the inside bar since this was the third tag of the megaphone bottom, and you're going to shoot for a tag of the megaphone top, and there's your risk. Do you see how now you're actually talking like a sharpshooter trader?
Uh-huh.
That 5-to-1 risk reward, that's not bad, is it?
No, it's not.
So what I would suggest to people is I there's no guarantees in this business. You all know that. And of course, also,
And well, you also had mentioned to me you want to risk against three prior lows. And so are these three prior lows here?
I wouldn't.
I,
This is more kind of like sharpshooter trader
yeah,
kind of talk. Because
gotcha.
frankly speaking, I don't even think I'm still skeptical as to whether this thing's actually bottomed yet.
Yeah.
I think that we're actually in a trading range right now.
Mm-hmm.
Have you heard me talk about candle body highs and lows for trade location?
Yes.
All right, so notice our megaphone top target on this particular trade so happens to be that candle body high. Do you think that's an accident? I don't.
No.
And then remember, where are these guys that bought up in these candles here? Where are they sleeping right now?
The couch.
Yeah, or the doghouse, or they're not in the wife's good books.
By no
So any
means.
kind of push up top here, they are so going to be sellers, right? I mean, it's just in fact, I would even say these guys here will probably front run these guys. But anyway, uh, where this probably would come out very well is if we go down to like the daily charts. So this is a weekly chart. I personally like to work off of weekly charts. But to your point, well, hey, you're always telling us to have three lows to risk against. Remember, I said that inside bar. What does that look like on a lower time frame chart? If we go down to the dailies, let's see what that looks
This should be like first or second week of June.
like. All right, so there is the daily chart. The inside bar
Yeah.
was actually the break of this high right there. Right? You see, that's where the trade fired.
Yeah.
So if you're trading that weekly inside bar, notice, remember where I had my stop below this low. And actually, this is kind of cool validation. Well, let's work backwards, right? The signal was right here, right?
Yep.
Right there, right? You can see that's where it fired.
Yep.
That was the inside bar breakout. We move through that high there. Does that make
It
sense?
does.
All right. And notice, let's zoom in here. How many lows do we have to work with here? On the day, oh, darn. All right. How many lows do we have to work with? We've got one low. We've got
Two.
two lows. And we've got three lows. See how that works?
Yeah, it does.
And notice, right, it broke out. Oh, I'm a bull. Look at me. Look at me. I'm a bull. And look at what they did. They went after these guys. Boom. See you later. That's exactly why. In fact, in the
Okay.
education program, we talk about W's, and ideally, you want to work with at least W's. You don't ever really want to take a V bottom. You've heard me talk about V bottoms like to be tested, maybe
Yep.
in the past. Here's a good example of a V bottom. Right, market comes away from there and then slams down and busts through it. So you never really want to take a trade off of V bottom, but ideally you'd like to see at least a W. And in our education program, of course, what we actually say in the education program, and there are a lot of setups that I just trade W's. I don't trade three lows because you just don't get them. I mean, remember, uh, the stuff that I'm trying to teach you guys is to try and make the odds as high as possible for you.
Mm-hmm.
So if you have three lows to risk against, the odds of them being able to take out this low before this thing can actually move up quite a bit are actually kind of low because they got to punch through a lot. Because keep in mind, every time this makes a low and it turns up, what it really means is that supply was driving this thing down. Somebody was selling, sell, 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 right? And then somebody came along and said, no, I'm going to buy up all of your sell orders and I'm gonna buy. And then they brought a market back down, sell, 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 sell. And then whoever it was that put the bottom in here, he came back and he said, no, I'm just gonna keep buying. I want more. Fine, you want to sell? Fine, I'll take those off of you. And he buys so much that he exhausts the sellers, or he exhausts the supply. And then they took it up. And then notice, what do we call that one candle right there?
That is a doji.
Good.
And then next to it's
So
an inf.
you notice that this point here, notice that high there, that high there, that high there, the doji here, and actually there's a whole bunch of dojis.
Yeah.
So at this point, there's still quite a bit of supply. But then another stab down, supply is going to come out. Let's drive this thing down, sell, 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 sell. And this guy, whoever came in here, he said, nope, I'll buy him back, I'll keep buying. So they punch up through these highs here, which was the supply.
Uh-huh.
That's the dynamic that I talked to you about earlier that is so important about how we, this concept called market structure. Let's see where I can go. So if we actually make a W, then, and maybe think about this as a previous high, something like that. What this really is saying, and you can see it here, lower highs and lower lows, is this is a downtrend, right? And you can draw your arrow just going downtrend like that, right? And then we have uptrends. So quite literally, the establishment of the W is breaking this downtrend. Remember, I said the most important point of this W is actually right here, this mark right there.
Okay.
And what this does is this breaks the downtrend and it establishes a new uptrend. So this W right through here stopped the downtrend of lower highs and lower lows and actually started a trend of higher highs and higher lows. Does that make sense?
It does.
All right. So to set up yourself for success, don't put your stop loss order right below this level. In fact, on the site, we like to call this the noob stop. If you bought this W, and of course you're going to say, well, Brian, shouldn't this be a W on the other side of this downtrend line? Won't get into that right now, but yes, that's the case. But if you had just bought, we'll just assume for the sake of this conversation that the downtrend lines have been broken and we're going to try and buy this new W. This low here actually is very vulnerable. You want to ideally actually have your stop below this low. And as you had said earlier, well, don't you really like to have three lows to work with? I'd love to have three lows to work with. The more lows that you have is quite literally, the more anecdotal evidence that somebody was coming in and selling through this move here, and somebody came along and bought and sort of blew this guy out of the water.
But you want them typically on W's, the lows coming from the W's.
Yeah, so
Yep.
kind of like what you see here, right?
Yep.
Higher low, higher high. Well, there's a W right there. So you could have made the argument that on the daily charts, your first sort of buy signal actually comes in on a move through that level there, right? See how it went down, came back up, came back down, and then back up, and then broke out through there. See that?
Yep.
This is
Drawing it in my
technically a W.
notebook.
Now, remember we had said earlier, some people like clotheslines and they'd rather see a W on a clothesline. If you go clotheslines, you can see there is no W there. So some people like to use clotheslines to validate. Remember, I'm a price purist, so I like all price. That's fine by me. And then remember, we had said that ideally we want to see the signal on the weekly chart. And interesting how the weekly chart is actually, and we call this a triple bottom. 1, 2, 3, three lows. So the weekly inside bar, bullish inside bar, harami, whatever you want to call it, it actually fired on this triple bottom, super sexy. And then, as I had said earlier, we don't want to put our stop just below this most recent low. If you look at the W here, down, up, down, breakout. You don't want to put your stop just below here. And this is exactly why. Because boom, they went after this weak low, but they never took this low up. And ideally, like you had said, and that's cool that you remembered that, is ideally we'd love the more lows that you have. I mean, if I have a situation where I have a price chart that looks something like, let's see, let me just draw here for you. I have a price chart. Actually, this isn't bad. We'll just use this. Notice how many now maybe I'll do it there, and then there. You could make the argument this is actually what they call a channel. So we went down and then back up and then down and then back up and then down. So you could make the argument that a break above this high here, notice how that happened right in here. I mean, how many lows do we have to risk against now? Like 1, 2, 3, 4, 5, 6, 7,
A lot
8
of them.
I mean, that's not a double bottom. That's an octagonal bottom.
Yeah.
What's the word for 8? I think it's octagon or something
Yeah.
like that.
Sounded right to me.
So the
You could
more
have sold me
lows
on
that
it.
you have, the better. And it's just more and more and more anecdotal evidence that clearly down in this area, right down in here, there's a lot of demand for this thing, right? Every time they push price down, somebody comes along and buys everything up. It might be Allen himself, who knows? But the point here is great visual demonstration of higher lows and higher highs. So this is off of the daily chart. As I had said, I personally like to do my initial analysis off the weekly chart to try and put everything into perspective. And I think the perspective here is that on the weekly basis, this is a megaphone. I wouldn't be surprised if your social media person actually drew a trend line like that, which is perfectly fine. This is a daily trend line. It was validated right here. Right? Does that make sense? Market structure?
Yes.
It's it there. 1, 2, 3. We'll do a quiz. Is this break of the trend line here, is that a buy signal?
If it's a W on the other side of it.
No, where's a W? I don't
No, I
see.
said if there's a W,
Oh yeah.
it
So the
is
answer is
no,
no. This is
because it's
not a
not a
buy
W.
signal.
Yes.
And interestingly enough, really good lesson for anybody who's watching this and trying to learn TA. It's kind of interesting that we went down this road today. I'm not quite sure why, but anyway, here we are.
We're learning, and that's what we're here for. You're making a
Well,
positive difference.
so notice the break of this trend line. What initially happened? Oh, that's an M, right?
Yeah.
Do you see the M here?
Yes, I do.
And then what happened? I mean, if you had bought this trend line break, you'd look like kind of like Goofy, eh?
Yeah. Just
I
kept
mean, look at
going.
that carnage. Boom. Just completely smashed. And look where the damn selling stopped. It literally stopped right on the trend line again,
Mm-hmm.
but from the other side. Isn't that funny?
Yeah.
And then, all right, no, now we're going to put in a bottom. So do you see how they tagged the trend line again? They rallied it up to a high all the way up here. See that?
Yep.
So if we were going to do a W, you'd have to go off of that level all the way up there. So down, up, back down. All right, if we can get up through the top here, then we got something to work with. But what did they do? They rallied it,
Bam.
failed in the wick, because you know there's a bunch of guys sleeping on the couch. I want to get the hell out of there. So they sold here. And then they put in another M. And again, look how the market just basically walked right back down along this trend line again from the other side. So that's why it's so dangerous to take that long on just on the initial break of that trend line. Very, very dangerous. So notice we come back down to the trend line, and then all of our talk about the weekly inside bar. Notice now we're actually making a W on the other side of this trend line. See that happening over here?
I do.
Yeah, that's basically that's your buy signal on the break of that trend line. So maybe the guy on social media, I don't know, the guy that you're referring to, or girl, or houseplant, or whatever the hell it is in this crazy ass 21st century. Um, maybe that's what they're making reference to, that this trend line has been broken now, and we're now in a bull phase. And the interesting thing is if you had bought, this was the daily W down in this area down in here. This trade reference was to the weekly inside bar. So I think on balance you got both daily and weekly buy signals here. That's not bad. I wouldn't fault anybody who had taken this trade. You're buying down at the bottom end of the range, and you've got price structure that's validating that this is indeed a bull. I think that the weekly bar fired off of that level there. So let's see if we can clean this up a bit. All right. You want to see something really cool?
I'd love to.
All right. So maybe you're sitting at home and you see this trend line break. You see the W's, and remember this was the weekly inside bar fire. And you're like, all right, man, I can finally start thinking about buying out. So on the Coinigy platform, I did 3 different tutorials on how to use Fibonacci tools. One was retracements, one was extensions, and one was chaos theory, right?
Mm-hmm.
So how are you going to get into this trade as a total sharpshooter? Well, we know that the W's come in. We know that the inside bar, the W's come in on the other side of the trend line. The inside bar has fired on the weekly price charts. This is trying to point up. I don't really want to pay these high prices up here. So is there a tool that I can use to try and help me, okay, on any kind of pullback I want to get in?
The
Because
fib.
remember, we're going to try and risk against this low. So what do you think I'm thinking about?
The fib.
Fib. All right, well, definitely we're
Yes.
using the fib tool.
Yes. And
They're a concept that I teach you guys.
the reload
trying to
zone.
help you. Yeah. So watch what happens when we put on the reload zone. And do you remember what fibs those are? And all of the audience,
Yeah.
I don't even have the YouTube page up, so I don't even know if it's operating or not.
We're getting people responding. I have seen on there, but it's 61.8 to or six
All
was it
right, you got one
61.8
of the
to
levels.
78.6.
Yeah. So you can see now I've put those. And I did up a full video tutorial on Coinigy for how to use fib retracements. So check that out. Notice there is that window. Now, this is going to mean that you have to work open orders because, frankly speaking, most people are not going to be quick enough to pull the trigger on their own at that level. But can you see how basically the market dipped into that zone?
Yeah, you've been a happy man.
And had you been working an open order at those levels, you would have basically been filled right in here. Not bad, eh?
Mm-hmm.
And then remember, what did I say? Something about candle body these for trade location.
Candle.
Notice we're going to put a line right on those candle body lows.
Yes, yes.
And look at that. Now, what do you think, folks? If you could get yourself to the point where you are buying these kind of assets right on that event, you can't even see the damn price. Can you see that?
Mm-hmm.
Let's drill down to a lower time frame. Let's go down to like a 4-hour chart. Let's see what that actually looked like. Just even off the daily chart, I mean, you can see there's the candle body lows, there's the reload zone, there's the tail. It just dipped right into that level. You get your fill, ding, 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 ding. And then the damn thing just takes off like a rocket the other direction. What do you think? Should we refresh the page?
Sure. Yeah, you got a green light in the bottom corner. It's just slowing up.
Thinking maybe my computer. I can't remember actually when I bought this computer. When I bought this computer, it was like a supercomputer. And now it's probably like just a run of the mill. I think this is a Pentium 1. Is Pentium 1 still a supercomputer?
Probably not compared to some of the supercomputers they got. Looks like
I'm just kidding. Pentium 1, that was basically a turn of the 20th century, I think.
that's fine. I got this. This is like a 2021 MacBook Pro, it's brand new. And then like 2 or 3 months after I got it, they released the M1 or like announced it, which was like a bigger processing unit and stuff in the for the MacBook Pro. Just a couple months too soon.
Okay, well, doesn't look like we're gonna be able to show you for your 4-hour chart. Anyway,
Yeah.
hopefully you can see what I'm trying to convey to you here. That would have been a hell of a level there to buy. And I don't know. I said, hey, did you see that? Is that kind of you want to see something cool? I don't know. Would you consider that pretty cool?
Yeah. I mean,
Seeing if you could get a fill right down at that
yeah, that
level.
was pretty
That was just
awesome.
awesome. So I was kind of hoping that we could show you that 4-hour level. Oh, isn't that interesting? This would load up. So I guess what ends up happening is I just do so many requests off of this, it just freezes. Anyway, back to our story. Um, where were we? Can I do this over here? I don't know where I am. Kind of gotten discombobulated. Was that the dump? All right, come on. Let's load up the chart. Please enable. All right.
Might be going there.
Oh,
Says it's
come on,
taking
dude.
to the right one.
I butchered this. What happens when you do too much studies? All right, so let's come back to our conversation here. So remember we had said that inside bar off the weekly charts was a really cool buy signal on the weekly charts after a stop run. Now, this is, like I said, off the daily charts. The problem here is that this thing, I like to use moving averages to try and tell me the general direction of trend. And you can see they are still pointing down. These are the moving averages I like to use, 13 EMA, 30 SMA. So at best, like this is almost what you would call like almost like catching a falling knife. But it is a valid weekly inside bar. And that valid weekly inside bar is actually a 1, 2, 3 triple bottom. It's a nice little double bottom. I think that's a great entry there on a trade right there. And then, as I said there a moment ago, you see the big breakout and you're like, I want to try and sharpshoot my entry. I could buy the W, but oh boy, that's way up there. How am I going to sharpshoot this and make look like a total boss to all my trading buddies? Throw your bid in the reload zone against these candle body lows for trade location, and you get an absolutely killer fill.
I'd say.
Is that going to work? Hey, there we go. That's kind of weird how that other page froze up. So look at that trade level. Holy free holes. I mean, that's trading like a boss. And that, like if you want to be like a professional prop trader or something like that, day trader trading the futures contracts and stuff, you got to teach yourself how to enter there. And what's also interesting too is, let's say you missed this trade here. Check this out. Notice the big rally off the lows, and you say, oh man, I totally missed the trade. Well, I mean, you can always go, well, candle body lows for trade location. That's not so bad.
Mm-hmm.
That's still actually below the double bottom breakout level and the inside bar breakout level. So why don't we draw a fib off of this high going back down to that low? And lo and behold, look how that's right in that reload zone.
Yeah.
So again, candle body lows for trade location, reload zone. You missed this entry down here, but you could always sharpshoot your way in off of this reload. Isn't that cool how that
It
works?
is.
And this works in the gold market, the crude oil market, the S&P 500, Bitcoin. It doesn't have anything to do specifically with dog money. This is just more about the mechanics of the way price moves. So what a cool analogy. Literally, take a screenshot of this. If anything, if you're watching this video and you want to learn, what you should do, in my humble opinion, is just go through all of the different time frames that we did here and just replicate what I've done and then take a screenshot of this.
Yeah.
And just out of curiosity, is there any kind of document or anything that you should have open while you're watching these videos to try and force yourself to learn from all this?
People seeing on the screen, I got my trading notebook for it all.
All right, so Joe's going to call it his trading notebook.
Journal, sorry.
That's it. You can call it a peanut butter pancake if you want. I don't
got my
care.
peanut butter pancake here.
Right?
I like to draw on it.
And he's drawing pictures with little chocolate chips on it. Whatever. It doesn't matter. The point here, if for whatever it's worth, in the pits and all that kind of stuff, we call it remember learning the process. I was a prop trader, was a broker for 1,000,000 years. All I do is I just talk, trader talk. We call it our trading journal. So anyway, can we, so if I had missed all of this entry and I was thinking about trying to get into this trade and I see that the market has moved up here, what do you think I should do?
You see that the market's moving up there.
We just did this.
Yeah. So
what should I do? Let's go back to the daily chart. Keep it simple.
Okay.
Remember what I just did here. So tell me.
So the reload zone.
Wow, the price is all the way up.
Yeah.
Here.
Oh, you draw it back down and use the Fibonacci retracement to that, and then you adjust your reload zone.
Right. And the interesting thing is, remember we said that the weekly buy signal was that level there. Notice how the reload zone, oh, gee whiz. Basically, there, that is that weekly buy signal level right there.
Yeah,
And even
dead
though the
center.
market has moved up substantially, notice the buying window is exactly the same as what it was before. It's shocking how this happens. So clearly somebody, some entity in the marketplace, right? We could even do candle body lows for trade location. So you could do a line off of that level there. So all of these candle body lows, and notice, look at that. That lines up almost perfectly with the weekly inside bar buy signal level. You could even do one right off of there. Same thing. Notice that's just sitting right in this reload zone. Isn't that remarkable?
It is.
So, and this is the odd thing about the universe is that it doesn't matter as long as, uh, if anything, this is an excellent analogy of why you cannot chase. Don't chase. Just be patient. We've come so far here, and then let's see if Joe's got his thinking cap on.
Okay.
If we actually trade below this low right here, um, what does this 2 bar pattern kind of look like?
That is the inside bar.
Very good. Excellent. And that's actually, is that
Then
a buy signal or a sell signal if we go through that low?
that would be a sell signal.
Yeah. So, and interesting enough, right? If we drill down to a lower time frame, what do you think the odds are that this probably looks like some sort of M up here?
Probably pretty high if it's starting to turn around there.
And lo and behold, this is a
Yep.
1 hour chart I've drilled down to. Can you see the M's?
See a couple of them.
Up, down, up, failure. Beautiful M there. See that?
Yep.
And we just keep making lower highs and lower lows here, right? This is painful. Now, maybe we can form a W here and stop this torture. Remember, I said off the daily chart, that's looking like an inside bar failure there, right?
Yeah.
So,
So we might be hitting that
if I
reload
wanted
zone.
to, and this is quiz time,
Okay.
what we just covered here again. If I wanted to, if this inside bar signal fires, right, and we go back down to the hourly chart and you're like, oh my God, this is a bear. Ugh. And I wanted to join this short trade, what would be the smart thing to do?
If that fires and you want to do the short trade, well, one, you'd need to do at least minimum of 2 to 1 for the risk reward.
That's always good.
And then
So that's a little different question because I
okay.
was trying, the
I'm
question
just
I
kind of
was
running through the
going for
process.
was in relation to what I've been trying to teach you guys here
Yes.
tonight. So
Oh, that it
what should
ends up
I
in the
do
reload
here
zone?
if I wanted to short this?
Would it be
How
to
about draw a reload
Zone.
zone going back up? Oh, hello. So do you see how this now becomes a selling window? Right up in there.
okay? I see what you mean now.
Like so. And what did we say? Candle body highs and lows for what?
Candle body highs, candle body lows for trade location of the reload zone.
Okay, so if you're thinking long, we want to think candle body lows.
Yep. So then
If you're
candle
thinking
body
short, what do you
highs.
think we're thinking?
So then candle body highs.
Right, very good. So notice candle body highs. You see that?
Yep.
And notice how that's right inside the reload zone. You think that's an accident?
No.
I don't. So, and then it was interesting because a few minutes ago, a minute or two ago, you said, well, you want to make sure that it's a 2 to 1 risk reward ratio. What did I tell you was a really good benchmark to use as sort of price objectives and profit objectives? This is going back a while. I don't know whether you remember this or not. Let's see. You might have this in your notes.
From today?
We haven't talked about it today. And actually, this is probably a really good range because remember we said the inside bar fired here,
Mm-hmm.
and then you got your triple bottom, beautiful buy signal.
Yeah.
If I was going to have a profit objective, what would be sort of a keep it simple, stupid. Don't overthink this. Don't be greedy. Just what is the natural technical thing to happen?
Natural. Don't be greedy. Trying to look through some notes and
Right, the gentleman's name.
oh, is
Give
it
you.
the Wyckoff or Gant?
Well, we could use Wyckoff. The interesting thing is there's market structure. So does it make sense that a this is a big M, so this is a big Wyckoff level,
Okay.
and then what would we call this event that just happened right here? What would we call that? Since you're talking about Mr. Wyckoff.
The is that the Ben Kopf check?
Yeah, where is Ben? God, I miss working with that guy. Anyway, he used to love this, and we affectionately called it the Benkoff check.
Gotcha.
So, but it's called a Wyckoff check because
Okay.
it's
That's
checking
funny.
the original market structure signal level.
That's funny. So I'm gonna change that in my notes to it is the Wyckoff.
Wow, that'd be hilarious. 20 years from now, I run into you and you're like, "Hey, that's a Benkoff check."
Yeah.
That would be so funny. Nobody in the public would have a clue what you're
Yeah.
talking
That's
about.
pretty funny then.
And I have a bad habit of doing that. Like I have a whole language of my own that I speak. You know, are you going to find anybody else in the internet that calls this a reload zone? Not likely.
No.
But I like to give all these things unique names. So then that way, number one, I know who are my students and who aren't.
Yeah.
And then number two, I can easily tell if somebody copies a concept of mine. I'm like, oh yeah, well, where did you learn that?
Yeah.
You know? It's really funny. And then also too, I mean, there's a million people that talk about 61.8 fib retracements, right? I
Yeah.
mean, it's a mathematical thing, and it's really cool when you go through all the math of why 61.8 is important. But I actually, do you know what I give this name? 61.8 fib.
Um it is got it here. So
And hint, it was an old crude oil pit trader that I used to work with who absolutely loved this level. He always traded it.
I've got written down 61.8 crude. So
Yeah.
I need
Well,
to
one
expand the
thing I missed
notes.
about that, and it's too bad because TradingView even got rid of the icon that I used to use. Why, I have no idea, but anyway, they did. And I used to, in fact, actually, there should be like a currency thing here. And use the upside, oh, actually, yeah, the upside down W. That's a currency note, but if I turn it around, maybe you'll remember this a little bit better. So if I turn that around and make an M, what the hell do you think I'm thinking about?
Money.
But anyway, right on
Monero.
61.8, I would use that as the level that I would use to describe. And when I teach, I learned this years and years and years ago that if you if you want to try and remember something,
Uh-huh.
or if a teacher's trying to teach you something, the more colorful the expression, the more action that's involved in conveying the idea, the more outlandish the concept or the association, the easier it is for the brain to remember something.
Totally. And
So if I just said, okay, from now on, you all have to remember 0.618, and what does this go? Well, we'll just say it. You have to remember 0.618. If I came to you a week or two from now and I'd never talked to you before, you would never remember that. There
yeah.
would be no reason for you to. But I affectionately like to call this, and I teach it in our education program, the Mountain Man level. Mountain Man. Mountain, he was probably the best crude oil trader I ever worked with. made tons and tons of money trading. Way, way, way better trader than I'll ever be. And he lived and swore by the 61.8 fib. That was his fib.
Okay.
Uh,
And
and
then the
the reason
70,
why he was called Mountain Man is because he would trade crude all day. And then as soon as he was done, the pit was closed. He'd head off and he'd go snowboarding in the mountains of Colorado in the afternoon. That was his life. It was a pretty good life.
not bad. Yeah, so he's
Yeah.
got the 61.8 and the 78.6 is your Brian's favorite fib.
Yeah. So, and I also like to call this the line in the sand because, actually, and I think I've shown you this before, like Bitcoin loves to sort of ultimately bottom off of the 78.6. So, anyway, the point being that I use very colorful imagery and very colorful language to try and help people remember these numbers and these levels and these concepts. So that's why I like to use my fun little language.
Well, I wrote down Mountain Man level in my
Right.
notes here.
And the interesting thing is I might run into you 5 years from now. And if I say Mountain Man, you might not even remember the number, but you'll probably remember the conversation.
Yeah.
Oh, I remember, and he was a crude trader and he would snowboard in the afternoon, right? Okay. So the point being that if you actually wanted to buy Doge right now, I would actually do the same logic here. Now, we kind of got off topic, but it's an important concept that you learn and that the audience learns. What is the keep you honest level indicator concept that we want to use as a profit taking level? Remember? And I said, it's associated with a certain gentleman.
Is it the
And I'll give you
50%?
another hint. The guy never smiled.
So
It's impossible to find an image of him ever smiling.
is it the 50% with WD
Okay,
Gant?
then who is the guy?
WD Gant?
Very good. All right. So notice this rally off of the lows. We did talk about the Wyckoff check. So that was an interesting observation. Then the price backed off. So that was actually valid. But also notice too, if we do a fib going from the lows back up to the highs, and all we're gonna do, and don't call it a fib because Mr. Gann will come from his grave and haunt you. This has absolutely nothing to do with the Fibonacci sequence. But there's the 50% rule, where very often markets will move in one direction and then they will retrace 50% of their previous move. So do
Yeah.
you see how if you use the 50% level as your profit taking event objective here,
Yeah.
that would have gotten you filled and you would have sold, just as your social media guy, of course, was touting how wonderful of a bull this was. Isn't that
Yeah.
funny? And then notice, and this is what we're really trying to teach you, is remember this was the inside bar on the weekly price charts. This was also a double bottom. In fact, we said this was a triple bottom. And even if you had just bought the double bottom and used the 50% level as your price objective, and you're going to risk to new lows, does that make a 2-to-1 risk reward?
We'll see. It looks like
Oh, very close.
close. Yeah.
So maybe what we'll have to do in this case is just risk the double bottom, the actual W. We can't risk to new lows. But if we're going to use the 50% level as a target, now we're the better part of 3-to-1, right?
Yeah.
It's like 2.75. 2.69.
Yeah.
Couldn't even read that. So there's an interesting analogy where had you bought this W down, up, down, and used the 50% level, you know what I think happened here is I think you actually go off of this. Because remember I said this was the original W. So if we go off of there and risk down to there.
You're over two. You're over 2-to-1.
Oh, look at that. 2.18 to 1. So I think actually that is the trade. W, so down, up, down, breakout. Breakout comes right here. The Slowpoke weekly traders, they're going to get in on a break above here because remember that weekly chart was an inside bar harami. But I like this trade, and I like that 2-to-1 risk reward. So, the interesting thing is if you wanted to be Mr. Sharpshooter, and we're going to use the 50% level as our target objective, look at the risk reward that comes up on these. So let's say there was that level. And so I was going to work my stink bid. Actually, which one was it? I guess it was this original one, right? Down in there. And then I bought, and I was going to use that 50% level as my objective. Look at that, 7-to-1 risk reward. Oh my goodness. Man, okay, well, maybe I'm not that good, but let's go off of this high. And I'm going to sneak in off of this reload zone tag. So that means I get long down right in there. Well, that's a 3.5-to-1 risk reward. That's pretty good. So you can see, I think that buying anywhere down in here, it's a little bit of a shame that these guys didn't get their 2-to-1, but 1.83-to-1, that's not bad. And, frankly speaking, I wouldn't even be surprised that if we drag this up to exactly 2-to-1, so we want to be specific here. So this candle low, we said was, wasn't it 600 even? I thought I remember it was like 600.
Oh.
Anyway, looks like that says 6016. Is that what
For the low?
Yeah.
It is 057.
Oh, okay.
Or for that.
But here, you know what? Let's be nice and professional. All right, there we go. Now we can actually see it there, and then we'll put on the little magnet button, and now we should be able to see it like a boss. All right.
Boom.
These should be the same number, I think. What does that say? 4753?
Yeah.
4753?
Yeah.
Let's go with that.
Cool.
So we're gonna res to 47. Let's go 47 even. 471. Let's go 472. All right. So we're gonna risk against that. Now let's go back and let's see 1.87. Now where is 2-to-1?
There we go.
Now, do you think it's an accident that the market got to that 2-to-1 level and then just stopped on a dime?
Not at all.
I tell you, I think that was a manufactured trade there, to be honest with you. And we even went a little bit beyond the 50% level, but they pushed it up enough to make damn sure they got their 2-to-1. I don't think that's an accident at all. So, remember we said, all right, well, we're getting maybe potential inside bar failures on the daily chart here. So maybe we ought to think about going short. We'll just flip back and forth between these two charts. And we'll give that
Stay on Doge.
All right, we're Doge, we're on Kraken. All right, this is Doge on Kraken. That's a 4-hour. We'll wait for that to load up. Here is that daily chart.
Yeah.
So, what's the level we're going to use as a realistic profit objective if we're thinking about shorting and we want to make money from trading?
50%.
All right, so let's throw that on now from here. That means we're looking for to take profits at this level here. Does that make sense?
Yeah.
And frankly speaking, you can kind of see this was obviously a key pivot here. Key pivot here, key pivot here. Really, basically a key pivot through all of that. Interesting how key pivot low. So I would almost expect that the market will oscillate back and forth around this level in the future. So we'll use that as a profit objective. Now, if we just went and sold this inside bar here, and we're going to risk to new highs, are we going to see a 2-to-1 risk reward if we take profits at the 50% rule?
one, that's 50%. It's kind of hard to see without it, but I don't think no. Not if we go
That
to
2 to
50.
1.
No, that's 1 to 1.
No, I don't even think it is even 1 to 1. No,
No,
0.95. So is this a trade that's in our best interest to take?
no, not at all.
Yeah. I mean, remember, folks, you're not always going to be right in this game. You want to write this down. This is critical information in this game. You have to understand this. For you to justify taking the risk, you have to get paid if you're right. And what does it mean to get paid? You have to see a number on the reward side that's substantially higher than the risk. You know, when I was prop trading, their number one rule is your average winner must be bigger than your average loser. If you get into the habit of taking these kind of trades and you actually get stopped out on this trade versus you won on this trade, you won't get funded at a prop firm. Even if you were 50% right, you're going to be losing money. You can't do that, right? You have to make money from trading. So, what did I say was the solution if you are very interested? Because you saw that this made this 50% retracement. So, I think that this rally is done. And I do want to short this because I don't really like that guy who runs this coin. And I actually think he's going to make a new low. So, I mean, that's here nor there. I'm just talking bullshit here. So, what do I want to do here? What do you think the prudent thing to do is?
So if you're not gonna set up the short off that,
Here,
yeah, you could set it off a different time point.
yeah, or just a different level.
Yeah,
In fact, you could even say, which is, a lot of people in trading do this. Now, I don't even give a crap about the squiggly lines. I'm going to risk to new highs and I'm going to use the 50% level as a target. And then that means by definition, if I want 2 to 1 risk reward, then I don't even care what this looks like. There's the number right there.
yeah.
So I'm going to work my open order to go short at that level. Now, I don't really like that approach. I would prefer that there be a justifiable reason for you to actually pull the trigger. And this is where we go into, I like the idea of this as being overextended. I want to see a move back to the 50% level. I do like the idea of shorting this. Maybe we have bear divs working. Maybe there's some big fundamental, like say a whole bunch of coins are being unlocked and you expect the market to come off a bit. You can drill down to that lower time frame chart. And then as I showed you earlier, right, we had said that this is just the simple 2 to 1. But what was the tool that we used to sharpshoot?
The reload zone.
Yeah. So we could go boom, back up to boom there. Shoot up our reload zone. Boom. And boom. And notice that would actually have you going short up here. Then remember earlier on, we said candle body highs your trade location. I'm going to try and see if I can actually get filled on some sort of spike up into this range up here. Hey, you could take that approach and just work an open order, or you could say, well, you know what? I'm just going to wait for the market to rally back to the reload zone and then wait for some sort of structure to come in up there. There's nothing wrong with that. So, in fact, this would be called an Adam and then an Eve top. You ever heard that expression before?
I've not.
Yeah. So that's a very popular charting sort of way to identify pivots in the market. And if I see that more, in fact, you could even make the argument to a certain degree. Yeah. Anyway, if I see one, I'll point them out to you. But usually markets actually like to bottom with Adam and Eve bottoms. And then sometimes it's an Eve Adam. But not to get off topic, sorry, getting derailed there. Point here is, do you see how if I waited, like this is not a very good trade location. There's our profit objective, and there's our risk level, and we're almost like basically halfway to the target. Poor trade location.
Gotcha.
If, however, I'm patient and I just throw on my reload zones, and then I sit and I can either work an open order, which is a little bit more advanced. I'm not going to say that's easy for new people just to work open orders. Then also, does your platform let you work open orders? That's another conversation.
Yeah.
Or you're going to let the market rally back into this window and then hunt for some sort of sell signal up here. Maybe an inside bar, maybe a double top, maybe a fractal, whatever, right against these candle body highs in this reload zone. And I'm going to risk to new highs, and I'm going to have a profit objective of the 50% rule. Now you tell me, how many times, if I just patiently wait for this trade to set up like this, and I take these trades, how many trades, and actually this is kind of a weird number, but what's that risk reward?
6.09.
6-1. I mean, what the heck is 6 as a percentage? That's 16.6%.
Uh-huh.
So if I had 10 trades and I only needed to win on 16% of those trades, that literally means I need of 10 trades. If I have 2 of them that produce this win here, then I'm actually a profitable trader. And the other 8 times I tried this trade, it failed and I got stopped out. I'm still a profitable trader. That's why it's so important to have the risk reward tilted in your favor.
Yeah.
And that's the secret to making money from trading, folks. Most people on social media, they never get that.
Yeah. Well, thank you for sharing that. That's truly.
And that's a pretty cool setup. Right?
Yeah.
And actually, what's really cool, and who knows if this plays out, but this is actually a potential harmonic. That's where this fun tool comes in. You could draw a harmonic A to, and actually we go down, up to there, up to there. That's 40%. So we're thinking bat. And actually that means that if this is a bat, then we should go up to about 88.6. So maybe down the road we can get into harmonic trading setups for you guys.
That's for another day.
There is a harmonic pattern that I've taught you before. Do you remember what that is?
Honestly, I just have harmonic under the location, the 3 reasons to make a trade and location.
Okay, because the harmonics, that last point that you saw on the chart, this point D is called a PRZ, and that is a killer trade location. But there is a harmonic that I have taught you guys, anybody who's watched these videos, where you can go that low up to that high.
Oh, the A to B, C to D?
Huh?
A to B, C to D?
Yeah. So, you see that move. It's kind of a difficult one, but something like that. So A to B, C to D. And this now becomes a PRZ right there. And actually, I think they even have it in the, yeah, there it is, A, B, C, D. So this is a harmonic. You could go boom, 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 like that. And that's a potential reversal zone. And interesting how you can see the M top came in. They even brought the market back down to this level, then rallied it up, then failed. And then notice, look at the counter trend rally, rallied right up to that level and failed. And actually, there was another market that did exactly this. What the hell was it? Oh, I can see it in my mind's eye. I can't remember what market it is. Anyway, a really good example just recently of a market that did this in the broader market. And then right now it's just floundering around this level. I don't remember what it is. I think I want to say, I don't think it was Bitcoin, but anyway, one of the names.
Yeah.
So what I would just simply say here is this isn't really a very good trade location. Um, Now, this is kind of interesting. I don't know whether you want me to fry your brain a little bit more, but
We gotta
remember we
get to
said that
one
if we were
more.
interested in, sorry?
I was gonna say we gotta get to the one more for
I mean,
the
look at that. We've already been going over 2 hours here.
yeah. Yeah, but we've been learning a lot. Been getting a lot out of it.
I hope
We
so.
had the one request from last week that had asked us to uh, get into IMX USDT once we're done with this
Okay,
one.
well, and maybe there'll be some more names there or ideas that I can throw at you on that chart. So, what was it?
IMX slash USDT. It's the immutable X.
All
So
right, and where do you want to look at this thing?
I'm not sure which one's gonna have the most. Let's try Poloniex first, maybe.
Polo? Has this thing been around a while?
I'm not sure. It wasn't loading for me when
This
I
is
was.
an hour
Yeah.
chart,
Oh,
so I
okay.
probably want to
Let's
start off
say.
on the fast time frame
Still, that's
possible.
not. That's a lot of flat lines. Let's try some else. Gate search.
Also, too, we probably want to talk off of charts that people here in North America can actually
Yeah.
read. That's not bad. I don't know what Gate is. Is that DeFi Gate.io?
No. They're definitely they are
Quite a bit of
spot
data there.
trading, but they've definitely been on the come up in terms in like recent months. They kicked off US users though. Like
Yeah.
like the rest.
So you guys probably have all heard me talk when we have symbols that doesn't have much data, and try and remember this going forward. Like assets that are kind of brand new, and you only see like you know. I'll just move it over here. Oops. Here, you only see like that much data, and you're asking me, okay, Brian, is this a bottom? And what do I usually say when we see a chart that looks like this that only has that much data? Do you remember?
Cut out for a
I want to
second.
see is a saucer bottom.
Yes.
So if you do see assets that look like this, and you're kind of like, well, there was the ICO or IDO or whatever the hell they want to call it, and maybe this is a bottom, I would just leave it alone because this is actually what needs to happen. Is this thing needs to stop seeing sellers, especially like these huge red candles like this, like that's a bad. As long as it's still doing this kind of stuff, then it means that there's just too much uncertainty about what's going on with the story,
Okay.
um, and you got to let it settle down. It's just that simple. I mean, ideally, of course, right? We want to see W's, and you can kind of see lower high and lower low, 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 lower high and lower low. It just keeps making lower low highs and
Yeah.
lower lows. You just got to leave this thing alone. And notice, and this is the important message about this, is look how long these saucer bottoms take to form. They sometimes take a very, very long time. I might even go that, saucer bottom probably looks something like that. So as long as we keep making lower highs and lower lows, and it's a bear market, that's how you define a bear. Highs and lower lows. I mean, it's good to see that into the end of the year, but 4-year cycles. Uh, excuse me. The whole crypto market was tanking. Of course, that's SBF and all that bullshit, and everybody's saying crypto's going to zero and all that.
Yeah.
So maybe that is an ultimate low. Also, too, this is a really good example of lows should be tested, right? You might argue that, hey, that's a really good looking little W down in there. Totally awesome. I don't have a problem with that. And, based on that very simple notion that I spoke of earlier, You could have a couple upside price objectives. Well, I mean, we can do a few things. We can do our trend lines. Remember, we said market structure defines trend lines. So there to there to there, break to new low. This is a valid trend line. All right, the trend line's being broken here. Where can I get a buy signal? Well, show me a W. Well, there's your W on the other side of this trend line.
Yeah.
I'd also argue that this is also a trend line. Mind you, this is kind of actually there's your. Oh, this is gonna be a little tricky here because you got to make sure this is exactly right. Yeah, so there's your downtrend, and notice this is a good example, right? So notice market ran into the trend line here. Is any of this a buy signal anywhere up in here?
No.
No, there's no W over here, right?
CM.
And what they did was they goaded people into thinking that this was a breakout. Hey, look at that. We're gone. We're not looking back. And then all of a sudden, right back to the trend line, then rally. And then, oh, look at that. What do we call that candle there with a wick up here and a tail down below?
That one is with the wick up
Doji.
there. Doji.
Okay.
Yes.
And which means indecision. Then we lost the doji low. Oh, I'm back to being a bird. And lower highs and lower lows.
That's it. On that big drop up there with that big green candle to that red. So you got the inside. That's us.
That's an inside bar. Yep, you're absolutely right. You'd also call this is a 3-bar fractal failure right there.
Okay.
And to a certain degree, it's not the best looking one, but
3-bar.
it's kind of railroad tracksy. So clearly, and of course, who are all these guys? Now you know this for the rest of your life. Where are these guys that are trapped up in there? Where are they sleeping?
The doghouse.
Right?
Let's start saying
Doghouse
some of these
couch.
people are down so bad, like they don't even have the chance to be on the couch.
Yeah, they're in big trouble. And then also too, if we're thinking about trade location going forward, does this not make sense? So this is going to be a killer short trade location, candle body highs. These guys finally get released. They're going to be selling like crazy. And that's probably a wicked short trade location right up in there.
That.
Anyway, we'll cross that. That's pretty esoteric for here right now. Right now, what I would say is there to there. Does this make sense that this is now a new downtrend line that's working?
Yeah.
And I might even argue, remember I did those funny triangles earlier? I would say that your trading range is now this here to here to here. And you're hoping if you're a bull and you're in this thing, you're hoping to goodness that whatever this floor was, and I don't even know if that's even an upward sloping trend line. I guess it is. That's tough.
It looks very slight.
It's close, right?
Yeah.
Yeah, I mean, you got to go off of the lowest lows. You can't really cheat here. So, that actually almost looks like it's pointing down.
Yeah, now that you zoomed in that way, it does. I think that is going
doesn't look
down.
good. So, I suppose if you were adventurous, this is what we call a dirty bottom. And if anything, what was another name that I made reference to that if you have lower lows like this and it's a downward pointing line, and then we do another one, say off of maybe like these highs. Oh, look at that. What did we call this? Expanding wedge
the megaphone
concept?
pattern?
Huh?
Megaphone?
Yeah. So it's uglier than sin, but I think I would call this megaphone.
Uglier than
Right
sin.
in there.
I like that.
And interesting how basically the market kind of got rejected off of the top of the megaphone, right? You might even go 1, 2, 3, and failure.
Uh-huh.
So that's not pretty at all. And I wouldn't use that as a textbook example to teach people, but I think that's what's going on. So what this implies is that, quite literally, I think that this triangle is actually your
trade
trend
zone.
line. Although I pushed that back, it should be off of there. I just wanted to try and have that line up. I think actually this is your trend in the short term. And then the question ultimately is, do we, and actually this makes perfect sense because I think I would draw that all the way up to there. Oops. To there. So that's, if somebody was asking me where's the trading range on this thing, I would say it's this yellow box. Um, So, actually interesting. Let's see. This isn't the best working example because this is a lower high, but it might work. Is there a concept that I use? And of course, if I ask this kind of question in this way, you should know what the answer should be. Let's see.
Reload zone.
Actually, we never even got to the reload zone. That's the thing. I think
Yeah.
this is one of these like Colin pump chaser and dunk chaser zones. So 38.2 is sort of your natural first stop target. And 50%, remember who was that 50%
WD
attributed to?
Gant or Gant?
GAN, GANN, GAN.
Gan. Okay.
So what I would say is that that's probably what was going on there, was that this was a 50% retracement of this range here. So I guess what I'm trying to get at here is there is a tutorial that I did for you guys on chaos theory.
Oh yeah.
Let's see if this little dirty double bottom actually painted some upside objectives for it. So chaos, we want to do 2.618 and 4.669. And actually, there's even one more. Do you remember what the final chaos level is?
Um.
And actually, it's not final, but it's the next logical step. Anyway, 877.
It's 7.
Yeah, look at that, son of a gun. So you can see this thing basically off this dirty bottom, rallied up to 2.618, put in a doji,
Yeah.
then went shooting up to 4669, which is what I think the market actually wanted to top out at against this trend line. Notice it pulled back and tested the 2.618, but didn't want to go through that low, and then turned around and just jackknifed straight up into the 877. And that, we affectionately like to call it on the site Collins dump chaser zone. He came up with that term. I would simply call it first stop target, 38.2. That's naturally, every market should naturally want to do 38.2s. Just to simply ask, not necessarily I'm a new bull market, but am I still a bear? Because if this thing can somehow hold these lows now, and then it can carve out a big W, well, rock and roll, then we really are transitioning into a bull. That would be awesome. But we still got a lot of work ahead of us to get to that.
Understandable.
So I would even say now, and let's see if you guys can put on your thinking caps. And Joe, if I wanted to buy this, what would be the study that I'd want to throw on this to try and help me see trade location?
The A to B, C to D.
You could do that. That is a valid answer. So we could maybe go from this high down to that low, and then clone that A, B, C, D. And that's painting an objective down there, which looks like that was perfectly hit. And, PRZs, right? That's what this point D is called. And if you want to make it a little bit crisper, I mean, I like to do this, but I've been doing this forever. You need to see the A to Bs and see the math. Like this tool here helps you see that. Although, it's arbitrary where you draw this D. That's why I like to do the lines manually, because you know exactly it's going to line up.
Yeah, that makes
Anyway,
sense.
there is the A, B, C, D. So this D, what did we call this D point here?
The
3 letters?
PRZ.
Right. So, and PRZ stands for
Potential reload zone.
reversal
zone.
Remember, reload zone. That's a Brian concept. You're never going to hear anybody else talk about.
So
So A, B, C, D objectives. That's valid. But what did I say? Remember we were sharpshooting, and what's the name? In fact, you just said it there a moment ago that Brian loves to use.
The reload zone.
Yeah. So let's see if that lines up. So we had the A, B equals C, D. And we can also do a reload zone, 61.8 to 78.6. 61.8, 78.6. And lo and behold, it's right in that zone too.
Yeah.
So we could make the argument, as we said, the triangle, I think, defines our range. And, probably clarity. I like to always shade pump chaser zones, Colin, the teal color. If this is a buying reload zone, I usually like to color it green, right, for the bullish, right, buy.
Yeah.
And then if it was a selling reload zone, I would usually paint it red. So given this image right now, because this was a new low, I would actually expect this to be tested,
Okay.
but this might be the test that's happening. What's the letter of the alphabet that we want to see here to
A
validate?
W
Yes,
on
this
that
thing's
side of the
moving.
trend line.
Right, so you can see there's that, I think, a prevailing trend line. It was broken. Then they come back down and revisit from the other side. Very normal. Interesting how there's a little inside bar reversal. Remember we talked about dog money? It's
Yep.
probably happened at the same time. Maybe not. I don't know. This is a weekly chart.
Yeah. Similar.
Probably if you go down to like the daily or hourly chart, this is probably a reload zone off of just this little range right here. And the lower time frame traders, like if we go down to like a 4-hour chart, let's see what that bottom looks like. Oh, Jesus, is this the same damn asset? It looks like it, eh?
Yeah.
So remember we said there just
It's
a
a
moment
meme coin.
ago that the weekly chart, that ultimate low there just recently was an inside bar.
Yeah.
And then you drill down to the lower time frame chart. What does the inside bar look like on a lower time frame chart? Well, and then remember,
Yeah.
Joe earlier was like, oh, well, I got to see 3 higher lows if I want to buy. So there's 1 low, there's 2 lows, and there's 3 lows. See that?
And buy. Okay.
This is almost identical to that Doge chart, isn't it?
It is.
And then we said that this counter trend rally probably just did nothing more than just brought price back up into a reload short zone. Oh, hello. Maybe you see how that happened? So I might make the argument if I was like a lower time frame trader, day trader, swing trader, those kind of things. I'd actually be looking for shorts up in this area here. Something like that. And sure enough, I mean, every time we stabbed up in here, I'm going to short, and there's a pullback. Stabs up into here, I'm going to short, there's a pullback. Stabs up into here, I'm going to short, there's a pullback. Stabs up into here, I'm going to short, there's a pullback. So you can see that clearly every time we get back up into the top end of this range, somebody comes along and keeps hitting this thing.
Yeah.
And of course, if you like Brian's favorite fib and you actually hit that 78.6, look at that sharpshooter trade. Holy moly.
Indeed.
And you could have done this a few times, eh? Look at that. 3 different occasions. If you hit that 78.6 level, profit. So, but that's like day trader, futures trader kind of guy.
Above my pay grade for now.
Yeah, for now, but maybe we'll get you there.
We're getting there.
So I can understand people maybe taking a shot off of this inside bar, looking for a move up top. It is a bit of a risk, kind of like what we talked with dog money. So I don't know whether they would have seen 2-to-1s here or not. And if you had used the 50% rule as your profit objective, no way. Could never have considered that true.
Yeah.
2-to-1 would mean that you'd probably want to see the market get up there. which is
Yeah.
interesting because all that really is just like we put in a bottom and now we're going to go test this. Now, remember I had said earlier, what was the chart pattern that we want to see to actually see a bottom over long term in any kind of asset?
A V?
Absolutely not.
No. Trying to see it long term.
Saucer bottom, do you remember
Oh,
that?
the saucer. Yes, yes, yes. I make
So a saucer bottom actually can also look like an inverted head and shoulders. So watch what happens when I go boom, 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 boom. I think this thing could work its way up to that 2-to-1 objective, and then boom, and then maybe turn back up there. You see how that looks like a saucer bottom?
yes,
Like that.
totally.
So you can think inverted head and shoulders. Um, you can think saucer bottom. But just I think the message that you really want to take away from this is don't be in a rush to call bottoms on this. Give the market time to actually find that floor. I think a lot of new people to trading, they just, and especially, we're looking at a 4-hour chart. If we go back to that weekly price chart, um, remember I had said earlier that what we really want to see here is, if you come in here and you're like, okay, this is the bottom, but it just made a new low. Okay, maybe this is the bottom. Oh, well, it just broke my
Yeah.
heart. Okay, maybe this is the bottom. All right, I'm gonna buy. And it just goes and breaks your heart.
It's funny you see on Twitter all those influencers like, is the bottom in?
Yeah,
The
and
amount of
they don't
times
even
you
know what
see
to look
that
for to
on
actually say
Twitter.
that the bottom is in, right?
Yeah.
That's what drives you crazy.
Yeah.
So anyway, and keep in mind, I mean, how many years have I been playing this silly game?
A couple
do
two
many
tree.
people that are social media influencers, do they have half the experience that I
Not even.
have? So, in fact, it's interesting that we were talking megaphone earlier. Can you
Because that
see
was
this megaphone? That high there, that high there. In fact, actually, it might even, that's not a good sign. I don't like that. So there to there to there. And if we go there to there, and you see how that kind of looks like a megaphone.
totally.
So if that's the case, now I don't know. We might be able to draw the megaphone off of that low, and then 1, 2, 3. Okay, that is a. But the point here is that that's the end of this move here, right
Hmm.
there. And of course, this is in that dump chaser zone, 50% level, also 877 chaos level. We're starting to get into some serious wicks. These guys, if we got up into there, they would love to get out of the doghouse or the couch, right, and get sleeping back in the bed. 50% retracement, all that. So when I see that, that to me looks like the end of the move. But remember this kind of conversation that we